Welcome to Explain the Charts. Today is October 21st, 2024, and we're taking a look at the SPY, S&P 500, and what to expect. Recent headlines suggest that the S&P 500 has seen a significant run-up in the last few weeks, reaching new all-time highs. Goldman Sachs, a prominent investment bank, has projected that the S&P 500 may see record highs in 2024, but also acknowledges that the recent gains have been driven by strong earnings expectations. Morgan Stanley, another major financial institution, has expressed concerns about the strong U.S. dollar potentially hindering the S&P 500 rally. Overall, the market sentiment appears to be cautiously optimistic, with investors anticipating strong earnings reports and positive economic indicators. However, concerns about stretched valuations, upcoming elections, and geopolitical risks could lead to increased market volatility. If we look at the daily chart for SPY, we can see a strong uptrend, with the price pushing higher over the past few weeks. The recent surge in price has taken SPY above several key resistance levels, suggesting a strong buying pressure. However, it is important to note that the uptrend is starting to show signs of exhaustion, with the daily candles shrinking in size, indicating potential loss of momentum. While the overall trend remains bullish, the recent consolidation in price may suggest a potential pause or even a slight pullback in the near term. Let's zoom in on the 1-hour chart to get a better understanding of the recent price action. The 1-hour chart shows a more volatile environment, with the price oscillating between short-term support and resistance levels. We can see a clear pattern of higher highs and higher lows, further reinforcing the bullish sentiment. The 1-hour candles are showing strong bullish engulfing patterns, suggesting potential for a continued uptrend in the short term. However, we need to be mindful of potential resistance levels, as the price has struggled to break through these levels in the past. We can also see some bearish signals, such as the emergence of a shooting star pattern, which indicates potential for a short-term reversal. Let's switch back to the daily chart to see where SPY is in relation to its broader trend. The daily chart indicates that SPY is currently trading above its 200-day moving average, which is a key long-term support level. The price is also trading above its 50-day moving average, suggesting a strong short-term uptrend. However, the price is nearing a potential resistance level, which could trigger a short-term pullback. If the price breaks above this resistance level, we could expect a continued bullish run, potentially reaching higher price targets. Now, let's examine the 15-minute chart for a closer look at the current market activity. The 15-minute chart shows a range-bound trading pattern, with the price oscillating between short-term support and resistance levels. We can see some bullish signals, such as a series of green candles, indicating potential for a short-term uptrend. However, we also see some bearish signals, such as a red candle indicating potential for a short-term pullback. Overall, the 15-minute chart is displaying a high degree of volatility, which may be due to the recent earnings season and ongoing geopolitical uncertainty. In conclusion, SPY, S&P 500, shows a mixed outlook with both bullish and bearish signals. The daily chart indicates a strong uptrend but hints at potential exhaustion. The 1-hour chart suggests a continuation of the uptrend in the short term but with potential resistance levels. The 15-minute chart displays a high degree of volatility, making short-term predictions difficult. The price is currently trading above key long-term support levels, but is approaching a potential resistance level. It is important to monitor key price levels, such as the 200-day moving average and potential resistance levels, to assess the direction of the market. The recent news and events suggest a cautious optimism in the market, but stretched valuations and geopolitical risks could lead to increased volatility. The upcoming earnings season will be crucial in determining the direction of the market, with strong earnings reports potentially fueling a continued uptrend and weaker earnings reports potentially triggering a correction.